Ladies and gentlemen, welcome back to the Simplicity Group YouTube channel. Today, we'd like to go over the tokenomics template that we're making free and public for everyone to use. So this is the supply side of the token, the allocations, valuations, vesting schedules, and this is what we use to create all of that for our own clients. Now, the reason why we're making this public and free is because we realize that there's a lot of projects out there that simply just can't afford our services, and they're left to kind of their own agenda. They're left to create tokenomics themselves, even though they've never done it before, or just to copy what someone else has done. Or there are even some templates out there which just, in my opinion, aren't very good. They're a bit confusing. They have too much faff, too much information, or they're just not structured very well, like some accelerators and whatever else. So we thought we'd make this public because at the end of the day, for us, we want to help improve the space, and this is one of the ways that we can do so. So without further ado, let's dive in. 2 notes. Number 1, only edit the boxes, the cells with the golden border. And if you need to remove any information, don't delete it, just put a 0. Otherwise, some formulas may break. Now, this is just some other instructions, but you can ignore this because I'm going to go over it now. So this is the main sheet. This is your core supply side tokenomics. And if I zoom out, sorry. This is quite a comprehensive sheet, right? This has everything that you need to showcase to investors, to exchanges, to market makers, for you to plan how much you need to fundraise, to allocate everything properly, so on and so forth. So without further ado, as I mentioned, edit the things with a golden border. So, well, the token ticker, let's keep TKN. Let's say $1 billion, 1 billion supply. Let's make the valuation something reasonable, like 30 million. So price at 3 cents. Here, this is the full tokenomics table. Now I have hidden a couple rows. These rows, you can make them whatever you want, right? The reason why there's so many rows is just in case you have a lot more tranches that you need to have. Maybe you want to have an airdrop tranche. Maybe you want to split up different rewards to different users. The rows are there. Hopefully there should be enough rows. If it's not, message me, but this should be enough. For the rows that we're not using, select them and hide them. Don't delete them, just hide them so that all the formulas work. So for now, for this explainer, we don't need any of these rows. Now let's just quickly fill this in. Let's say 10%, 10%, 1%, 10%, 5%. Let's give community, let's make community 50. Let's make treasury 10, and then actually let's make treasury 8. And then the liquidity, let's make it 6. If you want help filling this in, like with actual good numbers, and you want to understand what numbers to fill this in with, again, read the fundraising tranches article, read to how to correctly value tokens article. Moreover, I have a video on YouTube which explains how to create the tokenomics table. So link will be below. Make sure you check it out. For prices, let's just make this 0.01. Let's make this 0.015. Let's make the 0.025. Nice and simple. Allocations, let's make it 10. Let's make you, 15, 25. Let's go for 6, 4, 1, 4, 18, 21. These are super bog standard, tokenomics, for the team. Let's go 9 and 36. Like these are, again, every single project will have these completely differently designed. They need to be aligned with what the project needs to do, but again, read the articles. But these are kind of in line with what the industry is currently expecting you to have. For the treasury, maybe you want to have a little bit of an airdrop tranche, so let's say 5% there as well. There you go. Nice. So the tokenomics are now complete. Now, again, don't just copy this, right? Don't just copy this, please. Here's a very good article. You can't just copy and paste tokenomics, okay? Make sure you do this correctly with your own information, your own data, your own logical processes. But once you have completed this, congrats, you have made the supply side of your token. Now, let's look for the charts. So here we have the distribution chart, just showcasing the different allocations. If you want, you can change the colors of it. Here we have the emissions chart. Here we have the share of circulating supply. This I've never seen anyone else do, only we do it. And in essence, this just showcases out of the tokens which are currently out there and unlocked, how many of them are from different tranches. So here we can see that the community tranche clearly has a significant chunk, and clearly this project cares about the community. Here on the flip side, if we exclude the liquidity, actually we see that in the first few months, there are a lot of tokens that the investors actually get. So as a result, it's just something to note that, in the first few months, actually the project is prioritizing investors and not the community. So there you go. If you don't like this, go back, change the tokenomics, etc. Over here, we have just the, the cliffs and emissions per tranche, just again to showcase very quickly who has the cliffs, how long the vestings are. Here, we showcase the tokens per month that are being unlocked. As you can see, this is very stable. Match this with your growth rates. If you have significant users at the beginning and you expect super fast growth to, only plateau in about 6 months, then unlock more tokens at TGE. Have shorter vestings, don't have any cliffs. If on the flip side you expect slow growth, then do something like this. Make sure the airlines. Here we have a kind of high level, how much sell pressure you can expect. This just simply takes the tokens unlocked per month and multiplies it by the token price on listing. So it assumes nothing else changes, and it assumes that 100% of the tokens will be sold. So for example, on TGE, we have $1.5 million worth of sell pressure. And over here is kind of the investor section. So here we have the vestings kind of zoomed in a bit more for you to compare. Here we have the valuations. We have the delta to the fundraising round, which is basically the inverse of this. We have the ROI on TGE, which is actually very even, I have to say. I've perfected tokenomics, one could argue, but it's very even. If this was 14, then the private investors will be a little bit worse off, but it can be whatever you want, right? Again, read the article, it's all there. And this just explains the value of the tokens, not for investors, but just for the other tranches. Obviously, the rewards tranche has the majority of the value, which is good. Now, this is the main bulk of it. Over here in the next kind of sheets, this is where we calculate the liquidity. Hey, Alex from after I already spent 20 minutes recording the video here, actually forgot to tell you about the very important part. So over here, we have the emissions. This is the month by month emissions of the tokens. And as you can see, it showcases, of course, the amount of tokens being unlocked. You have the circulating supply, the market cap, and the tokenomic sell pressure, which, I explained a second ago. What this is used to showcase as well, it's well, in essence, when investors become profitable. So for example, if you have a 1x from launch, right? So you stay at 3 cents. The seed and private round investors become profitable by month 12, so by the end of the year, whereas the public round, the launchpad investors by the 5th month. If we however have a 2x and the token price is actually 6 cents now, then the investors become profitable by the 8th month and the public round investors by the 2nd. If we have a 4x, everyone's profitable straight away on TGE, of course, mainly because of the unlocks and the deltas. So this is very crucial to understand when investors will make money, to make sure that you're not, preventing them from becoming profitable for too long, because they would also be interested in that. Of course, that's how, you can incentivize them to invest. And it's just, good to understand how many tokens you're emitting, when, what the market cap would be, and so on and so forth. So this is a concentrated liquidity market maker, which is like Uniswap v3 and like Radium and like PancakeSwap. So these are the market makers where you select between what prices you want to allocate the liquidity, the upper and the lower bound. So here, this is just how many tokens are allocated to liquidity as per our tokenomics table. Let's say out of this, you want to allocate to a decentralized exchange. Maybe it's between normally like 20 to 25%, but it very much depends on the project. Some projects are 100% decentralized exchange. Other projects are 20% decentralized exchange. Others maybe 10. The difference is the higher you are, the more focused on the decentralized exchange you are. The lower you are, the more focused on giving liquidity to, or giving your tokens to market makers for centralized exchanges rather than deploying onto the DEX. Let's say you're a relatively kind of decentralized, project. You don't really like exchanges. Let's say you allocate 50% of this to a decentralized exchange. This is how many tokens you need to give. This is how much dollars you need to give. It's not fully exact. You can give a bit less if you kind of concentrate the liquidity a bit more, but just roughly for your information, this is how much you need to deposit. Now, let's say for the upper bound, of course, our price is 3 cents. Maybe let's make the lower bound, 0.003, right? So 10 times lower. We can do that just to see that. And then let's say the upper bound is, maybe 10x high, so 0.3. And there we go. Here we have our bonding curves. In essence, what this is showing us is, the price after you sell some tokens. So after you sell 50 million tokens, the price will actually be around, what is this? Yeah, they go around 0.06 cents. On the inverse, if you're buying tokens, if you buy $1 million worth of tokens, the price goes up to 10 cents, right, which is quite high. And as you can see, it goes flat over here. With buying, it doesn't quite reach there, but here it goes flat. And what this means is we have reached the lower bound. So this is how these decentralized exchange market makers work. Here, what we're showing is if you are selling tokens, how much dollars you would need to make sure that the price doesn't go. There we go. Problems. How much dollars you need to make sure that the price doesn't go below the listing price. So for example, if you want to sell 50 million tokens, you need to have $660,000 that needs to be invested. As you can see here, it's the same chart as this, but it's just the inverse, right? So here it's on the flip side, if you're selling, let's say 50 million tokens, there you go, then you cash out 660 grand. So, it just highlights the buy pressure needed and how much money you can actually make from selling tokens. And the data is coming from this. So these are the columns which explain all of the maths and not highlight, but they showcase, like, let's say you sell 3% of the supply, the price goes down by 67%. Let's say you buy $150,000 worth of tokens, the price goes up by 26%. Of course, if you change the upper and lower bounds, if you change the allocation to the DEX, these numbers will change, right? So you can play around with it. You can make sure that the liquidity that you allocate is, the best that it can be. And yeah, you can create a good liquidity strategy with this. And by liquidity strategy is just a fancy way of saying how much money you need to deploy and where you need to concentrate it. So this is that. Over here in the corner, we just have a separate quick calculator. So what this means is, let's say you've already launched, right? And this is just for you to very quickly calculate some additional stuff. So let's say instead of 60 million tokens or 30 million tokens, you actually have, say, 80 million tokens, right? Let's say you incentivize LP provision. Instead of 900 grand, let's say you have, $2 million here. The token price would be, if I unhide this, token price is here at 25 cents. 2.5 cents, right? As you can see, these are hidden. They're hidden by choice, by design. So just ignore these. This is where the maths comes in for calculating, the price and the liquidity in a V3 concentrated liquidity market maker. But yeah, so the price was 2.5 cents. So let's say the upper bound is, let's make it the same. Let's make the upper bound 30 cents, sorry. And let's make the lower bound 0.003. Actually, no. We can't do that because the price is already lower. Was it lower? Oh, no, it was 2.5 cents. Yeah, okay, there you go, that's fine. So now what we want to do is we want to simulate the buying and the selling. So let's say you sell, there's a big sell that comes in of 18 million tokens, right? The price nukes, goes down by 70% or 67. Let's say we want to simulate a buy. Now, reset this to 0 for the maths to work. Let's say you want to buy, I don't know, like $1 million worth of the token, and the price, you'll basically double the price. So this is what this calculator is for. It's just to calculate very quickly what happens. As you can see, a very quick caveat, as you can see here, the price is, actually 2.5 cents. However, here, the price is 2.6 cents. Now, as you can see here, the formula used to calculate the price in a concentrated liquidity market maker is a little bit more complicated than just dividing the amount of tokens by the amount of dollars, or rather the inverse, the amount of dollars by the amount of tokens in the pool. So it's a little bit off, but don't worry about that. It's nothing to, particularly write home about. If you play around with the upper and minimum bounds, things change. Again, it's just, you're doing calculus to calculate the price when it comes to concentrated liquidity. So the price may be a little bit off at the very beginning, but let's say we change the upper bound to 0.4, maybe we change it to 0.5, it changes. The upper and minimum bounds, they impact the price, basically, they impact the formula. So don't worry about it too much. Again, you're only simulating. In reality, things will be very different. And obviously, as a result, if you don't get this completely perfect, it doesn't really matter. But it's still a good way for you to understand what happens to the price, generally speaking, right? And how much you need to allocate and where you would need to put the upper and lower bounds. You can play around with it. By the way, the same is true over here. So sometimes if your upper and lower bounds are a little bit close together, then the price here kind of not breaks, but it's a little bit, it's not quite 3 cents, it's a little bit lower. Again, you can just ignore it. It's just a function of the maths. It's a whole thing. Just ignore it, basically. The rest of it is completely fine. Now, over here, we have what happens with your actual tokenomics. So this, as you can see, is just taken from the main tokenomics page from over here. Obviously, all the rows we didn't hide yet, as we did in the other page. So just ignore that. The idea here is, let's say we have the same, upper bound and lower bound. So let's say the upper bound is 3. This will be 0.003. Let's make this like that. And again, let's allocate however much we're allocating. So 50%. There you go. Cool. What this is showing us, or rather what this is asking us to point out, is how much of these tokens that are unlocked at TGE, how much of them will be sold. Let's say the seed investors are super bullish and they'll only sell 10% of the tokens unlocked. Maybe the private investors aren't as bullish. They will sell 25% of the tokens. Let's say the airdrop tranche, let's say the public round tranche, they sell 50%, it's retail. And let's say the airdrop people, they also sell 50%. So the other 50% of users hold on to their tokens. So we end up selling 8 million tokens on TGE. What does that mean? So as you can see here, that means that the price will go down by 31%, right? 30.86. This is directly correlated to this. Here in this pink, we showcase what happens if you're a little bit wrong and actually less people are selling the tokens. So what happens if 25% less sell, 50% less, 75% and 0, or 100% less sell. This will be the impact on price. And that is what, if we have the 8 million here, that's going to be in the middle of this chart over here. This is the kind of the bonding curve, right? That determines the price. And over here in the darker red, we see the inverse. What happens if you're wrong and too optimistic and actually more people sell the tokens? This will be the impact on the price. And here, the same thing, we showcase how much dollars you need to offset the selling. So if this is the case, and this is how many tokens are actually only sold, you only need a cool 200 grand of buy pressure to make sure that your price doesn't go below the listing price, which is quite good, right? So this allows you to, again, make sure that your liquidity is fine, it's efficient, the upper and lower bounds make sense, so on and so forth. Now here, this next page, it's the same. However, this is for V2. This is just a pure constant product market maker. You don't concentrate the liquidity between different price points. This is like Uniswap V2 or like just worse market make, like worse dexes. You don't need to really fill this in. You can ignore this, especially if you're going again on Uniswap V3 or Radium or PancakeSwap or whatever. But just in case, we thought we'd also keep this here. You do the same thing. You assume how many tokens are going to the DEX. Again, there's no upper and minimum bounds. You just get what you get, right? And then here's their price impact. And just for reference, just for you to understand the difference, here, let's say we sell 3% of the supply. The price goes down by 75%. And if we sell 3% of the supply here, the price goes down by 67%. So this is just more efficient. The curve is more smooth. It impacts the price less. But other than that, it's all the same. And same for the TGE price impact. You just fill in these numbers and you get the same amount of data here. Now, the last bits here are the financials. This is super simple, right? In essence, if you don't have financials, you can use this as a starting point, as a starting baseline. What we have here is the expenses. So this is your costs like operations, tokenomics, listing fees, salaries, whatever. You just fill it in. Let's say you're spending, 50 grand on operations, 20K on tokenomics, maybe operations, is a continuous thing. You just drag it like that. You know how to use Google Sheets, right? But there you go. These are your costs. You can calculate everything. You can track everything here. I highly recommend using this as a baseline, right? Because this isn't the most detailed thing, but it's just a good starting point. In terms of the revenues, here we're assuming that you're making revenues from transaction fees. So you input how many users you have, you input how many transactions you have, like the user growth rate. Start with 100. So if the user growth rate is like 10% month on month, to make this 110%, just for you know, it's just how it's done. Maybe the transactional value is like $50, you know, whatever, right? And then you have, well, let's say the operational fee is 1%, right? And then here you have the revenue, right? If you want to change this to maybe people are paying you a monthly subscription fee, just go ahead, you know, play around with it, change the rows, whatever, doesn't really matter. Here we also actually have the tokens being sold. So for example, here you have the tokens in the treasury, which maybe, you know, if you change these, around, then it might not actually select the correct one. Maybe your treasury is actually going to be in row 23. So just make sure that it's the right, selected thing. Like this one, for example, is F22. Is that correct? Yeah, I think that is correct. Well, whatever, doesn't matter. You know, you can input it yourself if you want. And then, you know, it showcases what happens if you sell some tokens. So for example, maybe you sell 50% of your tokens. There you go. There's your revenue. All right. So play around with this. This gives you the profit, the net profit, right? Whether you're in loss or in profit. And if we move over here, this is the discounted cash flow equity valuation sheet. So this will take your revenues from year 1, 2, 3, 4, and you can adjust the, you know, the assumptions here. You can adjust discount rate and so on. I wouldn't, you know, you can, but I wouldn't, because this is what, you know, in fintech, these are the normal kind of discount rates and the discount periods. So I'd leave this as it is. But this will have some sort of revenues, and, you know, out will pop some sort of valuation based on some more formulas and assumptions, and you will have an equity valuation. Very important, this is an equity valuation. It's not for tokens. If you want to understand how to value tokens and how to, you know, find a fair, fully diluted valuation for the token, read this article, How to Correctly Value Tokens. It's not that difficult to understand once you know how to think about it. In fact, it's actually pretty easy, but make sure you do it correctly. This gives you the equity valuation if you need it. And over here, finally, it's just me messing around trying to figure out how to model out centralized exchange market making, albeit this is just one of the strategies. There's whatever, doesn't matter. It's under construction. Just ignore it. Just ignore it. So all in all, this is the tokenomics template. Once again, this is what we use for our clients. So this is fresh from Simplicity Group. We hope that, you know, you use this. We hope that it comes in and proves to be very useful. Again, as I mentioned at the start, this is the best way that I've personally seen tokenomics be showcased. It's the most clear, it's the most concise, it's the most simple. It has all of the information that you may need, and it's very clearly, you know, out there. You can take screenshots of anything here. You know, you can save things as images. You can put them into a nice document, or you can just share this, you know, this whole Excel sheet to your investors or your market makers. It couldn't be any easier, right? So hopefully this is useful. If it is, you know, please feel free to tag us on Twitter. It'd be appreciated at SimplicityWeb3. You know, if you want help with this, feel free to message me on Telegram, or if you want us to completely design everything for you, feel free to book a call via the Calendly. We do, you know, of course, tokenomics like this, but we also do full token economy design with the utilities, policies, everything else. We do modeling as well, like deep stochastic models. And of course, we have advisory. So we help you with launching the token, with introducing you to exchanges, market makers, reading the contracts, making sure that you have the partnerships that you need, assisting you on the marketing. We do the whole thing. If you need help, we can probably help you. And if we can't, we know someone who can. Feel free to message me on Telegram. And thank you very much for watching. Hopefully this is useful. You know, share this to your friends, share this to your investors, share this to your other, you know, partners. You know, we'd like to hope that this template can at least make it very clear for founders what they need to do, how they need to do it. And yeah, so thank you very much everyone for watching, and have a wonderful rest of your day.